Hello friends, today we are going to analyze Winnebago Industries. We will find its intrinsic value and see is it a good investment at the current price. And I encourage you to stick around because there are some interesting numbers coming up. So what does Winnebago Industries do? It is a North American manufacturer of outdoor lifestyle products. The company builds motorhomes, travel trailers, and powerboats. And it is one of just 4 stocks that we can find in Norbert Lou portfolio. And I made a whole video about his portfolio, so if you want to check it out, the link will be in the description. Okay, so first let's see who owns this company. Individual insiders, that is a check. Individual insiders own 3.7% of the company. And what we want to see is a number over 2%, because then we know that the management has its skin in the game. So this is really encouraging. And are individual insiders buying right now? That is an X. We only see one transaction in the last 12 months, and it is a sale transaction. But it is from almost 12 months ago, and after that, there is no movement from individual insiders whatsoever. So it is nothing major, and I would not worry about that too much. And do super investors own this company? This is a check. There are 2 super investors who own Winnebago Industries. It is Norbert Lou, and it makes up 17.6% of his portfolio, and Robert Olstein, for whom this company makes up 1.2% of the portfolio. And are super investors buying right now? This is an X. Norbert Lou sold over 160,000 shares in the last quarter. So it was a reduction of almost 14% of this position. Okay, so now let's see how is the financial health of Winnebago Industries looking. Return on invested capital, that is a check. It is 18.8%. And we want to see a number higher than 10%, so that is very nice. And free cash flow growth? It is a check with a growth of 53% in the last 9 years. But it really went up in the last 3 years, and actually the last 3 years were really good for the company as a whole. It is the same story if we look at the book value, revenue, or profits. And speaking of profits, what do we know about net profit margin? It is a check at 7.4%, and the sector median is 5.1%. So not a huge advantage over the competitors, but still an advantage. And now let's take a look at shares buyback. It is an X. In the last 9 years, they issued extra 22.4% of shares. So that is not good. Shareholders are getting diluted in quite a substantial way. And the debt? It is a check. It would take just over 1.5 years to pay the long-term debt with a current free cash flow. And we want this number to be under 2 years, so pretty safe situation concerning debt. And does Winnebago Industries pay any dividends? Yes, it does. The dividend yield is at around 2%, so annually per every share you get $1.08. And what is the situation with a payout ratio? That is an X. It is 6.5%, and we want to see a payout ratio somewhere between 20 and 50%. So it is a safe payout ratio. It does not hold the growth of the company back, but if you want to concentrate your investment on dividends, then 6.5% is a bit low, and you could want it to be a bit higher. And what about dividend growth? That is a check at 15.1% 5-year growth rate. They are paying dividends since 2014, and they really went up in the last 2 years, which were pretty good for the company, so that is understandable. Okay, so now let's value this company using a discounted cash flow formula. We will have to estimate the growth of Winnebago Industries for the next 10 years, and we will make 3 scenarios: low, medium, and a high one. And I want to be very conservative here. The actual growth of the company is much higher than the estimates we are going to make, but it is a cyclical business. So you really have to understand it much better to feel comfortable with everything that may happen in the next few years. So in the low scenario, we will estimate a growth of 2% for the first 5 years and then 4%. In the medium, 4%, and after that 6%. And in the high scenario, 5% and then 8% growth. So with such estimates, the intrinsic value in the low scenario is around $112, $130 in the medium, and $145 in the high scenario. But these are not the prices we should be looking for, because we have to always add a margin of safety. I use a 30% one, and that gives me enough room for error so that I can feel comfortable. So with such a margin, we get $78 in the low scenario, $91 in the medium one, and $101 in the high one. And the current price is around $53. So it is all in the green. And in the high scenario, the difference is really substantial. So Winnebago Industries has a very nice financial health and incredible growth in the last 3 years, and they are paying a stable dividend, and the current price seems really interesting. So it all seems great. But on the flip side, they are diluting the shareholders by issuing more shares. And we have to take into consideration the cyclicality of this business. And if they were doing really nicely for the last 3 years, then we know it is not very probable that this trend will continue. So remember to do your own due diligence before making any financial decisions, and especially with a cyclical business. It is just necessary to understand it really, really well. That's all for today. Thank you for watching, and I would really appreciate if you would press the like button if you found this video interesting. And remember to subscribe to the channel if you want to see more videos like this one. Thanks again, and bye-bye.